Nice that you've made it into the room with us here at the moment. I was having a chat with our next presenter up on stage. Would you like to come up here and join us, sir? And the word Wiluna came up. Has anyone ever been to a place called Wiluna in Western Australia before? You have? Now, in 1970, they closed a bar there that was reputedly, at the old Wiluna Hotel, the world's longest bar. So if you ever go, it's marked out on the ground. So it was more than 130 feet, but I was just trying to find the exact length for you. But that is a useless bit of trivia, but nevertheless, Wiluna is a very interesting place, and it's not far away from a fabulous opportunity that you might all like to be involved in. So this is Richard Homsany. Now, he spent the last few years researching and innovating, looking for the optimal way to make Toro Energy's Wiluna uranium project the best uranium project. And his presentation today is titled, Wiluna Uranium Project, the best is yet to come. And he's been beavering away feverishly at that. So today, let's find out what his strategy is going forward. How would investing in Toro benefit you? Could it benefit you? Let's find out. Richard, welcome.
Thank you, Chris, and thank you, delegates, for attending and hearing the Toro story. Yes, the title of our presentation is The Best Is Yet to Come, because with our project, we still haven't worked out the optimal version financially. So it's exciting to be undertaking that work in a very strong uranium market with rising uranium prices. So what does Toro have? Toro has a portfolio of uranium assets in Western Australia. Its flagship project is the Wiluna Uranium Project, 700 kilometres northeast of Perth. The Wiluna Uranium Project is comprised of 3 deposits: Lakeway, Centipede, Millipede and Lake Maitland. It is an environmentally permitted project with 62.7 million pounds of uranium, so it's undergone the rigours of that environmental assessment. And as I just said, we've spent the last 7 years since we obtained the permit, just before there was a change of government. There was a need to obtain a permit before the policy changed. We think we can do this project much better and deliver significantly better financial returns. We also are in the Yandal region, so gold prospectivity is high with all the gold production up there. And we were also the first public company, we think, to intersect massive nickel or semi-massive nickel sulfides. And we've got some ore grade results on ground that we thought was prospective for uranium. Turns out it's likely to host significant nickel. We also have 28.2 million pounds across 3 uranium exploration projects in Western Australia. So we have 90 million pounds of U3O8 in total. And we also have 68 million pounds of vanadium. So with 90 million pounds of U3O8, we have a market cap of around 50 million. So there is significant upside. The fact that we're in Western Australia is the biggest drag on our valuation. If we were in South Australia, if we could shift the border slightly, the line, if we were in South Australia, we're in Canada, we're in Africa, we would have a market cap of at least 5 times where we are here today. In fact, we could be up to 10 times where we are here today. But the mere fact that we're in a jurisdiction that does not have a supportive uranium government policy, well, not yet anyway, and it's only ideology. There's nothing systemic or fundamental. It's simply a temporary, transient ideology. Was last permitted in 2017. We think that is when that changes, and we think there's big momentum for change, and we're hearing real positive things from government unofficially. We think that Toro will just burst out of the blocks when that happens. We have a very experienced uranium board and management with over 2 decades of experience through myself, Richard Patrizio, Michelle Murrier, and Dr. Greg Shurtleff. There's decades of uranium experience. We haven't just come into this game, we've been doing it for a very, very long time. As I said, we have a significant uranium inventory, 62.7 million pounds in Wiluna. We also have a joint venture arrangement with Japanese parties only at Lake Maitland. And because Lake Maitland was the most amenable to some optimisation on our flow sheet over the last 7 years, we decided to do a scoping study for Lake Maitland only on a $70 uranium price and a 70-cent US Aussie exchange rate, and we were able to achieve an NPV of $610 million. For Lake Maitland alone, remember, Wiluna is 3 deposits, and on just one of them, we've got an NPV of $610 million. And there's more uranium resource in the other 2 deposits combined than there is at Lake Maitland. So when you think about our market cap of $50 million, we've got a NPV of $610 before tax based on a 70, not 80 or $90, $70 US uranium price. The upside is huge. We recently restated our resources at 2 of our deposits at 100 ppm to be more in line with what our uranium peers are doing. And again, 8 million more pounds of uranium, which at $100 a pound is what, $800 million more uranium? And also around 8 million pounds more of vanadium. Vanadium is a pure byproduct. It doesn't make or break the project. It's cream on the cake and makes some very significant contribution to CapEx. So it comes out with the uranium. We're very happy to take it and sell it. We are going to pursue production at our project, notwithstanding that the government policy is not favourable for us at the moment. It's only a matter of time. It's not a question of if, it's a question of when, right? So we're very confident in our work. At the moment, the pilot plant work to trial the metallurgical processing flow sheet that we developed over the last 7 years, the new and improved one, that's going to lead to these windfall gains on our project. We're very confident that this pilot program will be successful. I won't labour on the uranium market. You've heard plenty in the last panel session to suggest uranium is going to almost double from here, the uranium price. And again, we did our NPV on $70, not the current spot price of low 90s, $70. That's a map of our project. Lake Maitland, as I said, has Japanese joint venture partners that basically have an option to acquire 35% by writing a check to us for $39.6 million US dollars. That's only on Lake Maitland, but given the bifurcation in the uranium supply market, where Western supply now is going to be at a premium to Eastern supply, we think we're very well positioned to attract not only joint venture partners for our other projects if we so want them for financing, but we think that our Japanese partners, which is a syndicate of nuclear power companies out of Japan, plus Hitachi, the well-known reputable global trading house, would be very interested in Wiluna as a whole. The research and development work we did was best, we yielded the best results at Lake Maitland. Previously at Lake Maitland, which is the map of the red and green you see there, we were only going to mine the red, but as a result of our work, the costs have come right down, which has meant we can mine both the red and the green. We've got an exponential increase in the amount of pay dirt there, like hundreds of millions of dollars. The mine life goes up to 17.5 years. And did I mention it? This is only just one of 3. So when you look at Toro, you've got to look at that the work we've done and the NPV that we've delivered is only on 1 of 3 deposits. And the NPV is going to be recalculated at Lake Maitland. It's going to be exponentially bigger than what the number we published is, given the rise in prices and given that the exchange rate hasn't really moved much. We think when we give you a republished number for Lake Maitland, it's going to be massive, and massive after tax. For a $50 million market cap company, this is insane, right? Like, there is so much upside, and we've got so much news to deliver in the short term and in the medium term and in the long term with our pilot plant. We're also going to look at doing work. We're also currently doing that work to see what mining material, or what materials we can bring down from Lake Way and Centipede Millipede and process at a Lake Maitland operation. If the permitted project, so the permit was for a processing plant at Centipede, we believe that the processing plant should be at Lake Maitland and Lake Maitland should go first. So not only do we need to amend our environmental permit for the time condition, which has lapsed on one of those conditions, the permit is still valid. We just need to make a retrospective amendment, but we know this current government will give us grief, so we need not ask. but there will be substantial amendments required. So the current permit that we have needs to be substantially recut so that we can deliver hundreds of millions, not tens of millions, hundreds of millions of dollars more value to our shareholders. We improved the flow sheet. I won't labour on it. Lower capex, $189 million US dollars, including a 20% contingency. So that includes a contingency of 20%. I know some of my friends in the room don't like to quote contingency, but we do to be conservative. And there's a 15% EPCM in there as well. So basically, the project is going to be a smaller project because of the beneficiation and the filtration steps from the flow sheet that I kind of glossed over. We can achieve great savings on reagent use, on power consumption and labour. And that has resulted in massive OPEX and CAPEX savings from that originally thought about 10 years ago under previous management at Toro. And furthermore, our all-in sustaining cost over the life of project is a very low $28 US per pound of U3O8, and that's just at Lake Maitland. All of the improvements at Lake Maitland we think will work at Lakeway and Centipede Millipede, maybe not quite to the same degree as Lake Maitland, but it will work and it will deliver improvements. So the value drivers for this company, whether you're a current shareholder or a potential investor looking to invest, just understand the value drivers coming up are transformational. This company is so undervalued because we're parked in a jurisdiction with the government, as my peer said previously, with its head in the sand, but they're slowly taking their head out of the sand, I can assure you. We also have great nickel hits. We're getting all-grade nickel hits on our ground that we peg for uranium. We didn't go looking for projects. We drilled the ones we had. We thought we'd find gold, maybe nickel. We found nickel. We also, and you'll see, 9 metres at 2%. Nickel is fantastic. We've got some very encouraging gold results. The likelihood is we will announce soon that we will demerge the nickel and gold assets out of Toro. So if you're a Toro shareholder, you're going to get free shares in a base and precious metals company. So that's something to look forward to. So like I said, there's plenty of news flow coming up. The best version of Wiluna is yet to come. We're working out what is going to be the most financially feasible project we can deliver. It's not the one we've permitted. It's going to be something different. It's going to be the same deposits, but done differently. Plus, we're going to get a license to get the vanadium out. With the new processing flow sheet, the vanadium leaches out beautifully. We don't go chasing it. It just comes with the uranium. So we're very much looking forward to delivering news flow, particularly against the backdrop of rising uranium prices, strengthening global uranium markets with no real handbrake on the price. That can be forecast. So we're going to do recut of Lake Maitland. We're going to evaluate whole of Wiluna, see what materials from Lakeway Centipede can be brought down to Lake Maitland and be processed there. The government in WA, officially it's got a stance of not supporting uranium, but when uranium was $19 a pound or $40 a pound even, saying no to uranium had no consequence because nothing was going to develop. Now it's going to be almost impossible for a government to resist making some really ignorant comments about uranium. They have to be very specific as to why they don't want this industry to get off the ground that will deliver billions of dollars. With the nickel industry really suffering in WA at the moment, with an opposition now that has come out strongly saying that if they take power, they will reinstate uranium mining. We also have a statement from the Premier here from 3 months ago where he says that the benefits of WA helping other economies decarbonise at the expense of WA's or Australia's is a valid thing to do. So as we know, uranium and nuclear, the only reason uranium price is going up is because of the demand for nuclear energy, and you saw from COP how many countries committed to tripling nuclear. You know, he's given you a statement right there that uranium falls perfectly within the ideology of helping the world decarbonise. at the expense of Australia decarbonising. We don't need to be a nuclear nation. Toro's success and prosperity, its share price going to $5, $3, $1, whatever price you want, is not dependent on Australia being a nuclear nation. As long as other economies in the world want nuclear, then Toro can play a role in delivering uranium from a reliable and secure source to fuel those reactors and the energy needs of other countries, particularly in a climate where net zero by 2050 is what the world has signed up to. Uranium is here to stay, Toro Energy is here to stay, and thank you very much for your attendance today.
Well done. Well done indeed. Can you all hear me now? Well, I've resurrected my microphone. Fabulous. For some of you, that's possibly a bad thing, but nevertheless, I do need to communicate with you who's next on stage. Have you heard the song, You Lift Me Up? You raise me up, you lift me up. I was just trying to search if they were the same song, because I was having a chat to this fella. You've already met him once before. Murray, come up on the stage. Just try it. Now, he's had a knee operation recently, so he's actually doing really well to make it up and down the stairs. But I was looking at your thing, elevate uranium, you lift me up. Everything you do is positive. So I went down a tangent there, which I shouldn't have gone to. All right, let's get back to you.
Chrissy, you're eating into my time, you know.
I know, but that's all right, because you've already spoken up here before. All right, so we're talking Elevate.
And let's
Elevate Uranium, the most active uranium-focused exploration company on the ASX. You didn't think I knew that. Any man that wears yellow socks, yellow jocks and a yellow tie has to be slightly obsessed with yellow cake. So let's hear what he has to say. We're going to Namibia, we're going to Australia, and you're going to give us some insights into the company and your rapid growth trajectory.
Who wrote that?
I don't know. I kind of paraphrased it. Please make him welcome, everyone.
Thank you. Let's all elevate together, Chrissy. Whatever that may mean. Thanks for attending. Elevate Uranium, as the name suggests, we are in the uranium sector. We weren't distracted by any other commodity. We've been in the sector since 2006, so we're not a fly-by-night company. We've not just arrived. We've been here for a long time. We've built up an asset base across 2 jurisdictions, geographically diverse in Namibia and Australia. We have £142 million across those 2 countries. We've got an extensive and diverse project pipeline, which I'll explain and show you in a minute. And we've got this disruptive beneficiation process we developed in-house a number of years ago, which works extremely well on these shallow superficial uranium deposits. We're aggressively drilling. We've got 100 drill holes coming out of Namibia per week, about to put a 5th rig on next week, go to 125 holes a week. We've got an experienced small team. We're strategically located, I'll explain that in a minute, in Namibia, and as we talked about on the panel, if you're here before the panel, uranium is the clean energy of the future. So corporately, small number of shares on issue, 308 million for an ASX listed company, that's a small number. 142 million, market cap's 148 today. Money in the bank as of the end of December, and no debt. So we're looking in pretty good shape there. From a major shareholder point of view, the 2 ETFs in the US, top 2, 3, 1 and 3 shareholders. Number 2 is Mrs. Hill, that's my wife, by the way, if you weren't sure, and other board members. So we've got a lot of skin in the game. We're aligned to shareholders. We certainly believe in the story, and I find it easy to tell because it's a good story to tell. So what we've got here is this diverse project pipeline we've got. Colour codes up there, the dark blue is the resource development and growth. The light blue is a resource definition. Orange is exploration play, and all due respect to the previous speaker, the option play is Western Australia. So, you know, we've got some pretty good assets in the Namib area of Namibia. The Marinika is in the central Orongo area, and we've got Angela in the Northern Territory of Australia. So all reasonably good jurisdictions to operate in from a uranium perspective. So Namibia, if you're here for the panel, Namibia is the only country in the world, the dedicated uranium association. It's a conduit between explorers, producers, developers, and government, general public, and they do a fantastic job of promoting the country. Rossing have been operating since 1976 on a continuous basis. That's 48 years of continuously operating. So that's 2 generations of Namibians very familiar with uranium mining. Husab been developed, Paladin's Langer Heinrich, Orano's Trikobi project in the last 18 years. Bannerman, Deep Yellow adjacent to us, just got mining licenses only in December last year. So got a history of developing uranium projects, and we don't see any reason that we wouldn't be able to license ours in the future. We're looking for shallow uranium deposits, so we concentrate in two areas. We're looking for uranium that's, as granites have weathered over millions of years, they've leached the uranium out. It's flowed down through old river systems and reprecipitated. So that's what we're looking for. So down in the Namib area in the bottom left, bottom right of this slide, we went upstream from known deposits. And as I said before, those known deposits were discovered by General Mining, who morphed into GenCore back in the late 70s, early 80s. Our discoveries in the Namib area are discoveries. They weren't bought. So the flagship Copies project, we've got 48 million pound there. We announced a resource update in November of last year. We're drilling 25 holes per rig on this project per week. So we've currently got 3 rigs on it, so there's 75 holes a week coming out of this project. Each hole costs us $1,000 a hole. That's as cheap as you can get, inexpensive exploration and effective exploration. 4 discoveries in 4 years in Namibia. We've just done we're doing a resource update now. We're drilled down here in the Copies 4 area and we're drilled up to the north, top of Copies 3. As we head to our lease boundary in the north and the south, mineralisation is getting thinner, which is great for us because we don't have the tenements either side. So the bulk of the mineralisation is sitting in the middle of the tenement. So that resource update comes out in a few weeks' time. Just resource geologists working on it now, and that will sort of form the next one. We then move into indicator drilling on this project, and that'll increase the confidence level of resource. One thing I really like about this, and we talked about Athabasca Basin versus Namibia in our panel. Athabasca Basin, I think next gen's 400 metres deep or something or other. We're looking at 95% of the ore is within 15 metres of surface. So that's really, really shallow. So it's just going to be a surface miner cutting at 500 mil deep, and the strip ratio is going to be low. You'd expect, hence, that so shallow the mining costs are also going to be low. So that's a really good project for us, and very encouraging, very shallow and a large resource. Moving across the country where I live, Australia, we've got, as I said, assets in Western Australia and also in the Northern Territory. So in the NT, we've got the Angela project, 31 million pound at 1,300 ppm, good sized resource. We're going to do some work on that this year. We've identified the lens that's mineralised. It's a sandstone hosted dipping at 9 degrees. Seismic Works identified the lens that's mineralised. It's identified a lens underneath it that's never been drilled. So we want to go and drill that, see what's there. The other one is Minerva, 10 holes drilled with intercepts greater than 10,000 ppm. Now we're starting to talk about the Athabasca Basin grades, and very, very high for Australia. We want to go and drill that. It hasn't been drilled since 1978 when it was discovered. We want to go and drill that, see what the structure looks like, try and work out how to explore it further. So they're the 2 projects we're going to be working on in Australia. But the aggressive nature of what we do, we've got 5 drill rigs working as of next week. 3 of those right now are on Copies. We want to take that resource into the indicated status. Kiribati, Capri, and other discoveries we've made in the last 4 years, we want to take those to maiden resources, right? So now you're starting to see the project pipeline, the growth projects. We want to drill rig on those, trying to find new discoveries. We want to make it 5 or 6 in 5 years, not just 4 in 4. And then we talked about the Northern Territory. So a lot happening there. So from an upgrade perspective, upgrade was developed out of necessity. We had the Marinique Uranium project, low-grade project. We wanted to do something innovative, otherwise we walked away. And what we did was developed a process called upgrade. It's where we actually concentrated the gangue minerals, the minerals that don't have uranium, and threw them away. That's counterintuitive. People don't think of doing things like that. So that makes it innovative and hence patentable. So we've got 3 patents around the world on this process, and it significantly reduces the cost base for us. You can imagine you're reducing mass all the way through. You reject greater than 95%. So less than 5% goes to the leach. Leach is the highest unit cost operation in a processing facility. So hence, a very small mass gets leached. And now so imagine that reduces CapEx and OpEx by around roughly 50%, but also gives us optionality as to where we take that concentrate. We leach it on site, or we take it off site and leach it in a third party. That's where this strategic location in Namibia is. Rossing been there for 48 years. Excess capacity refinery is a potential potential location for us to leach and refine the concentrate. So a lot of benefits around it, a huge number of benefits around it that I could talk about for a long time. And if you want to talk about it, come to the booth and have a chat to us. Uranium shortage, we all know there's a supply-demand issue. Interesting, we talk a few people that say lithium demand was built on future demand, or lithium market was built on future demand. Uranium market is built on current demand. And we're not meeting the demand for the nuclear reactors now. So how do you incentivise supply? The underlying commodity price has to go up. So hence, if you're on the panel, the consensus was $150, $175 a pound by the end of the year. And we're sitting currently at 85. So we all think the uranium price has gone up. You could say we're a little bit biased in our view, but that's where we sit with that. I do like to finish on this slide. This is not the Athabasca Basin. This is Namibia, right? This is a Koppies project. Koppies in Afrikaans is a small hill. That's not a Murray hill, that's a small hill. Sorry, Chrissy, I had to throw that one in for you. And that's what it looks like. Just beyond the distance there, you can see that's Koppies. We don't have to do a lot of clearing. We don't have too many issues with animals. And yeah, looking pretty good from a project point of view. You like that, don't you?
A really small hill. Did you get the right photo in your slide deck? Yeah. See, I didn't eat into any of your time. You still had 3 seconds left.
2 seconds left, and you consumed 45 of that.
There you go.
Thank you.
Thank you very much, Murray Hill. He's a good man. Thank you so much. All right, Baselode Energy Corp, would you like to come and join us on stage? I neglected that we were in the 10-minute power hour for dating for our next lot of presenters. So Baselode Energy Corp is redefining uranium exploration in Canada's prominent Athabasca Basin area. The company's Athabasca 2.0 exploration strategy led to the discovery of... Your cue.
That's me, all right.
Oh no, what did lead to the discovery of? How do I say it? Is it Accio?
Accio, yes.
Accio at Uranium Prospect. This gentleman is the CEO for Baselode Energy Corp. This is James Sykes. He is a very experienced geologist. In the last 15 years, his focus has been on uranium. Please make him very welcome.
Thank you very much for the lovely introduction. Happy to be here. And you just heard a lot about Athabasca uranium, so let's actually take you to Athabasca and let's look at some uranium. It's just some of the highlights of the company. Again, Accio, that's our high-grade uranium discovery that we made in the Athabasca. We call our exploration process Athabasca 2.0, and I'll explain that very quickly. Since we made our discovery in September 2021, we've drilled 30,000 meters on Accio. And right now, we're currently drilling for another discovery on our Catharsis project. We've got $20 million in the bank. We have to spend $12 million of that this year, so that means we have to drill a lot. Hence, we will continue to advance our Accio project, but we're also exploring 4 other projects in search for a new discovery. One of the key takeaways about Accio is that we have near-surface basement-hosted uranium mineralization. That's important for this area of the world in the Athabasca because all of the mills in the Athabasca were built off open pits. This has open pit potential with mineralization starting at 25 meters beneath the surface and a second zone of 32 meters beneath the surface. Myself, I've been in the industry since 2006. I've been part of a number of big discoveries, most notably for being chief geologist behind NextGen Energy's Arrow discovery. Uranium fundamentals have been talked about a lot here, so I won't get into that. But let's talk about Athabasca 2.0 because that's very critical in what we do and why we do. If you see the 2 colors there in rock type, sandstone in yellow, basement rock in pink. The sandstone is basically like walking on the beach. Soft sand filled with water. That sand is now solidified, but still filled with water. So if you look at the dashed line in the middle, everything to the left, you're looking that way, everything to the left-hand side, you can see a lot of red in those deposits there. That means they have gone into production. Anything gray has not gone into production. The takeaway from this slide is that the more sandstone you have, it's harder to put those mines into production. And that's because of the water issues that we have in the sandstone. The only 2 that are highlighted as being in production with sandstone cover, Cigar Lake and MacArthur River, are both massive deposits. They were both over 300 million pounds, both over 20% when they started mining. Those are the type of deposits that you need in this area. If you remove the problem of water by making the sandstone thinner and having more shallow mineralization, such as the deposits in the middle, you can mine those at much lower grades and smaller sizes as open pits. If you remove the sandstone completely, you can mine these at even lower grades and even smaller sizes. So when we set out to to move Baselode forward, this was the strategy. We said we do not want to find a discovery, we want to discover a mine. Big difference. Anybody can find these type of deposits. These ones are much harder to find, but that's where your economics are. These are the ones that go into production. So if you note, all of our projects are outside of that sandstone, conveniently located along major structures. This is our Accio deposit so far. Mineralization starts as shallow as 25 meters, goes down to about 200 meters, 110 on average. Our discovery hole hit mineralization at 320 meters depth, but we've never followed that up. That's a game plan for this year. You can see some of the stats there, and we do have numerous intercepts of what we would call high-grade uranium, being greater than 0.5%, so greater than 5,000 ppm. Global average grade for uranium is about 1,000 ppm, 0.1%, so much higher. Just a quick schematic of what a cross-section looks like through Accio. 25 meters of overburden. That's not mining. Overburden is the stuff that the glaciers left behind. Those are soft sediments, boulders, things like that. You don't mine that stuff. You move it. It's earth-moving exercise. Once you get through that, then you're at the basement rock contact, and you can start your mining operation. At least that's the idea. Just a quick summary of Accio. So we have completed 30,000 meters since its discovery in September 2021. You can see some of the highlight drill hole intercepts, 0.9% over 31 meters, and that starts at 70 meters true vertical depth. There's your typical Athabasca grades that people love to see, close to 2% over 12.5 meters, again, very shallow. So we've got all the right ingredients for typical Athabasca style of mineralization. We love Accio so much, we're definitely going back to it this year. We've got 12,000 meters planned. We're trying to advance Accio into a resource category by the end of the year. We're hoping to have enough meters and density drilling completed to reach an indicated NI 43-101 mineral resource. So we do have a few more zones that we have to continue drilling. We have strike extensions still open for additional discoveries, one of which where we left off with a drill hole that had 8 meters, 1% over 8 meters. We have the depth extent that we're going to follow up as well. We'll be doing some ground geophysics to try to define the structural nature of. We'll be doing a ground geophysical survey to investigate the structural controls of mineralization and targeting that with diamond drilling. We're also going to be looking for unconformity mineralization. So unconformity is that contact between the sandstone and the basement rocks. That's the environment where you typically get your 5% and your 20%. We have really strong anomalies that are synonymous with unconformity deposits across the Athabasca Basin on our project. So we'll be putting a lot of effort into hopefully making another discovery along there. That's what Athabasca uranium looks like. It's very beautiful stuff. But as mentioned, we're also looking to make a new discovery. So a lot of our plans this year, not just on Accio, well, just over half of what we want to do this year is on Accio. The other half will be on exploration, again, on 4 different projects, starting with our Catharsis project, which we are currently drilling. This project had never been drilled before until we drilled it for the first time last year. We liked what we saw then. We still like what we see now. We started out with 2,000 meters, loved what we saw in the first 3 holes, saw the potential of the project, and decided to increase our meterage to 4,000 meters in attempt to fast track a new discovery. In May, we'll be going to our Blair project, which again, we have never drilled, but previous operators drilled along this structure here, and they did intersect anomalous radioactivity. Our target area is right down here where we have overlapping geophysical anomalies, typically what we drill that lead to great structures and alteration and uranium mineralization in some events. But being on a fertile corridor, we do believe that this has the potential as well to host a deposit. So that will be conducted in May, 1,500 meters. Continuing on with the exploration strategy, again, Accio is up here. If you follow this blue line down, that is a superstructure. That is a massive structure. It's a scar on the face of the Earth. You can see it from satellites. It's actually quite impressive. But Accio is at the north end of it. To the south end of it, we have similar geophysical anomalies to what we've drilled previously. And we do believe that this structure, which already hosts mineralization, has the ability to host more. So we're putting another 4,000 meters into this area in hopes for yet another discovery. Our shadow project, we will not be touching this year, unfortunately. Exploration plan, so this is everything all summed up that I've just talked about. You can find this on our website. It's over 20,000 meters of diamond drilling, very active, drilling now, drilling through to the end of the year. So we should have results and news continuously flowing. 133 million shares outstanding, I still consider that to be quite low. 40 million warrants and options, share price around that 30 cents, market cap around that 40 million, but we do have 20 million in cash. Like I said, we have to spend 12 million this year, so that's a great problem to have. We love to drill, we love to explore, we love to find uranium mineralization. Insiders own about 10% accumulated, Sprott ETF owns another 10%, and then basically brokers and retail have the remaining 80%. This is our board and management, a bunch of good-looking guys. And Baselode is part of the OR group of companies, which have been very successful in the last 12 months. American Eagle Gold, for example, is a company that their last result had 900 meters of 1% copper equivalent. Beautiful number. Another company that is not on here is Awali Resources, who just recently announced yesterday 45 grams per ton over 32 meters. So absolutely wonderful, very successful group of companies. Thank you.
Thanks, James. I love your quote, dream big. It reminds me of a quote I read which said, dreams should always be bigger so you can grow into them. And it's a really good metaphor for lots of us here today. You had a huge dream and you're growing into it. And Scott, who you're meeting, who's coming up next, if you shake hands as you go down. Can you give him a big hand as he goes off, please, James? But Scott, as he's coming up here, I've been following Scott's journey for ages. He had a massive dream at the start of this journey, and they're growing into it, and they're looking pretty good at the moment. So they're focused on building an integrated battery metals processing business. It's in Vietnam. It produces nickel, cobalt, and manganese, and that's the precursor products for Asia's growing lithium-ion battery industry. So their target, their dream, is to be the company that will produce the lowest emission precursor as verified by Minvaro and the Nickel Institute. It's a big dream. The man who's in charge of that dream is Managing Director Scott Williamson, and he's going to share with us an update on the recent happenings. Please make him very welcome.
Thanks, Chrissy, and thanks to the team at Vertical Events and everybody who's put this conference together. It's always great to be back here. So today at Blackstone Minerals, we'll be talking about our globally significant metals, nickel mining and refining business that will produce the chemical products required for the lithium-ion battery. Just a quick snapshot. We are listed on the Australian Stock Exchange. In the end of the last quarter, we had $3.3 million in cash. We actually end this quarter with more cash. So we've sold one of our strategic investments and we had an R&D rebate during the quarter. So this quarter will actually increase our cash position slightly. We are well supported by a group of institutional investors, particularly Nanja Savetta out of Hong Kong, Deutsche Balaton out of Germany, and Fidelity, one of the largest institutional investors in the world, sits in there as a major shareholder, board and management with around 5%. So we are located in the north of Vietnam. We're about 6 hours west of Hanoi, and we're looking to build a mine and a refinery. The mine was a previously operated nickel mine between 2013 and 2016. We came in, turned on the drill rigs. We've found around 500,000 tonnes of nickel. We're also going to build a downstream refinery. The refinery will take nickel concentrate and it'll convert it into the first stage of the lithium-ion battery, which is called a precursor cathode active material. It will have nickel, cobalt, manganese in the ratio of 8:1:1. That is a battery-grade chemical product for the lithium-ion battery, which trades at a significant premium to the underlying metals. The downstream refinery will process 50% of the feed will come from the nickel mine in Vietnam, and 50% will be imported feedstocks from Canada. We recently announced an option to acquire the Woboden nickel project in Manitoba. The reason we particularly like Manitoba is it also has abundant renewable power, 100% hydropower. So our two main assets will be the Tarkwar nickel project, where we have around 500,000 tonnes of nickel, and the Woboden nickel project in Manitoba, where there's about 1.3 million tonnes of nickel. So those two assets will feed into our refinery, and that's where we'll convert the nickel concentrate into the NCM 811 product. We are looking at a partnership process at the moment, looking at bringing in downstream partners to help with the funding of this large-scale refinery. So you can see here, this is where we are located in the north of Vietnam. The mine and the refinery are joined by the Da River, which allows us to use the barge for the transport of concentrate between the refinery and the mine. There's 47 kilometres between the mine and the refinery. We'll now just move into the refinery. We have built this with two separate trains. So each train will process 200,000 tonnes per annum for a total of 400,000 tonnes per annum. So you can see that having two trains allows us to stage the capital through our development process. So you can see this one train and a second train, and they will produce 46,000 tonnes per annum of nickel in the NCM 811 product. One of the benefits of operating in northern Vietnam is that we will have some of the lowest costs in the industry. We will have very competitive labour costs, power costs in the order of 7 cents per kilowatt hour. So you can see here on the cost curve, we are very economic at today's nickel prices, and that's driven by the benefit of having an integrated mine and refinery, the power and the labour costs. You can see here, very competitive with the Indonesian nickel, which is in abundant supply at the moment. So we're confident we can compete with Indonesian nickel supply, and we're confident that we will be able to ride through the cycles. We will be economic at today's nickel prices. Unfortunately, there are a lot of nickel mines at the moment that are not economic. One of the other benefits of having that abundant renewable power is that we will have the lowest CO2 footprint in the industry. That work has been done by a group called Minviro. The number we have is 9.8 kilograms of CO2 per kilogram of final product. We believe that we can reduce this further through a number of initiatives, particularly focused on this number here. We can reduce by 2.4 through a direct power purchase agreement with the renewable power providers. By bringing in the renewable power sourced nickel from Woboden, we can reduce even further. So we're confident we can get to 1.4 or even net zero from day one. So, and most importantly, that is much lower than our peers in Indonesia. So you can see here to the right, the Indonesian HPAL and RKEF, 2 to 6 times the CO2 footprint. This is becoming very important for the OEMs and the electric vehicle manufacturers. So one of the benefits of our flow sheet is that we can source nickel from different third-party providers, nickel concentrates. We can also source black mass, which is the recycled product from the lithium-ion battery. We'll now just zoom into the mine. We have over 25 advanced stage nickel sulfide targets. We've tested about half of those targets, and you can see here we've defined a large-scale open pit mining opportunity. You can see here to the right of the open pit, we're looking at an integrated waste landform, which allows the co-disposal of waste and tailings, which minimises the footprint and improves our ESG credentials even further. You can see here during the period between 2019 to 2022, we drilled over 100,000 metres of diamond drilling, and we defined 4 ore bodies. We have 2 types of ore bodies. We have large-scale disseminated ore bodies, at Ban Phuc and Ban Qua. We also have these small, high-grade, massive sulfide vein ore bodies, which are amenable to underground mining. The disseminated ore bodies are amenable to large-scale open-pit mining. And you can see here, this is the large Ban Phuc disseminated. It'll produce around 18,000 tonnes per annum for up to 12 years with a low strip ratio of about 3:1. We also have developed a tunnel through the ore body, took a cross-section of that ore body for metallurgical purposes. This ore body will be processed through a 6 to 8 million tonne per annum concentrator, conventional flotation process. And then using the Dart River system, it'll be taken to the Tarkwa refinery where we will produce the chemical products, the NCM 811. We'll now just quickly look at the 50% of our feed which will come from Canada. We particularly like this region in Manitoba, 100% renewable power, around 3 cents per kilowatt hour, some of the lowest power costs in the world. We have interest in Corp, which is listed on the ASX. So we have access to the Lynn Lake project. We also have an interest in flying nickel on the TSX, which has the Monago project. We have recently announced the option to acquire the Woboden project. We believe through this consolidation of the Manitoba region, we have access to some of the best undeveloped nickel sulfide deposits in the world. We particularly like this grade range around through that 0.3 to 1% because it has a grade, but it doesn't have the large-scale capital requirements of some of the smaller or larger, lower-grade ore bodies. So in summary, we're vertically integrated. It's a globally relevant nickel sulfide opportunity, first quartile cost position, and some of the lowest carbon footprint in the world. Thank you for your time.
Thanks, Scotty. It's amazing how fast we can talk at the end when we need to cram so many things in. Patriot Battery Metals. Hello, sir. Welcome. Now, these guys are a hard rock lithium exploration company. They're focused on advancing their district-scale 100% owned Corvette property, and that is located in the James Bay region of Quebec. It's close to regional road and power line infrastructure. It's in a very good location. This is their CEO. His name is Blair, and he's joining us at FFC to provide a project overview and also an overview on the company's strategy. So please make him very welcome.
Thanks very much, everyone. It's great to be here. What a great venue and a great conference. We're really happy with what we've seen here and the results, and very happy to be here and appreciate your taking the time to hear our story. We think we have a very compelling story, and I think I can rattle through it pretty quickly. We'll get back on schedule, and yeah, I'll jump through. You got to read this quickly. So who are we? We're a hard rock lithium explorer. We are developing the Corvette property in northern Quebec in the James Bay region. And what we found to date, we believe we're demonstrating both size and scale. Corvette is already the largest pegmatite in the Americas, 8th largest globally. It's pretty significant, and it's even more significant when you overlay that on the demand profile that's coming up in North America. We're well funded. We did a strategic investment last August after we announced our maiden resource of $109 million with Albemarle. We still, at the end of December, our financial quarter Q3, we had $106 million in the bank. So we've been able to progress this project very effectively, and part of that whole progress is not only doing the drilling, but also putting in some of the infrastructure as well. Deposit to line up with the demand and downstream demand for the North American market. So this is the North American downstream market, and to put this in perspective is probably just to the right-hand side of the slide. The 2027 battery manufacturing capacity in North America is planned to be around 700 gigawatt hours. That translates loosely to, say, 475 odd kilotons of lithium carbonate equivalent. That means we need to come up with another 3 CV5s in order to accommodate this sort of demand. So it's pretty incredible, this demand profile that's coming. We do think Corvette has the ability to certainly accommodate a large part of this demand, and we are actively working towards that. So here we are, the old famous bubble chart. So it shows where we sit within the world. So we're 8th largest here. And keep in mind, it's our first resource. It's only the resource based on 3.7 kilometers of linear drilling of a 50-kilometer trend that we've staked on this greenstone belt in northern Quebec. So we believe there's a great deal of activity at our property. This just puts it in context of the Americas. So we are the largest in the Americas. Again, this maiden resource, we published it last August. It was 109 million tons at 1.42%. That was based on 46,000 meters of drilling. Since August, we have drilled almost another 100,000 meters. Now that's not only exploration drilling, but also infill drilling to demonstrate the presence that we have at CV5. So where we're located in northern Quebec, we have some amazing infrastructure. So we're fortunate to be adjacent to the Quebec Hydro Scheme. If you're not familiar with the Quebec Hydro Scheme, it was built in the 70s and basically established a massive hydro scheme made up of multiple stations along the waterway that was defined with reservoirs and generation capacity. It's one of the lowest cost electrical power that is available, in the order of about 3.5 cents a kilowatt hour. That is adjacent to our property. We also have the Trans-Niagara Road, which was built to construct the James Bay hydro system. So it's a very high quality all-weather road maintained by Quebec Hydro, which allows us to have great infrastructure nearby. We have since put in the little connector road that you can see joining us from the Trans-Niagara down to CV5, and we've also put a camp in. And what that allows us to do is to gain access to our property. In the early days, it was by helicopter, expensive drilling. We're pleased to announce this winter with our 11 drill rig program, no helicopters. It means no pilots, no helicopters, no mechanics. It's a fantastic outcome for us for this winter with 11 drill rigs. So we are in a great location located in northern Quebec. This is zooming in on a portion of this 50 kilometers of trend. So again, the CV5 maiden resource, our first resource based on 46,000 meters of drilling in 2022 and into early 2023, got us to 109 million tons at 1.42%. Last year, we had some fires that slowed some of the drilling, but we were able to make it up in the late summer and fall. We drilled another 45 to 50,000 meters last year. Those results have been progressing through, and we're continuing to release the assays for that drill program. We commenced our winter drill program in the first week in January, and since then we've exceeded 40,000 meters with our 11 rig drill program. So we're using this drill program, this winter drill program, to uplift not only the 3.7 kilometers of CV5 that we defined in the maiden resource, but we did extensional drilling last year, which took CV5 from 3.7 kilometers to almost 5 kilometers. So we are infilling all of that to lift up, to basically convert from our inferred resource to a very significant indicated. So we are looking forward to publishing that resource in August, so we'll stay tuned. We have quite a bit going on at site as well. As I mentioned, we built the camp, we built our access road. We're continuing to do the baseline environmental work that we need for our permitting, and we also have commenced our permitting process for the CV5 production scenario. So we submitted our project description to the Quebec government, and that is now underway, and we have a timeline that we're defining to look to be permitted in late 27 and construction and commissioning heading towards the end of 28. So we believe we can achieve that timeline based on the work that we've done today. This zooms in a little bit on the growth of the resource, and this really demonstrates when we first started drilling, we connected the outcrops to 2.2 kilometers, then to 3.7 kilometers for our resource. We've now extended that beyond even the 4.35. So as we continue to extend, this deposit remains open to the east, to the west, and north and south for other parallel splays. But it's also noteworthy that this current 109 million ton resource is made up of basically 93% of it is one pegmatite, one quite fat pegmatite, which contains the majority of this resource. So that's significant when you look at it from a perspective of mining and a limited dilution that you're going to get from the country rock. So that's also a big plus for what we have. We're also very fortunate that pegmatite is very richly mineralized with spodumene, and the crystals are large and lend themselves to very easy processing through a DMS-only circuit with very high recoveries. We're jumping ahead of myself here. So I think we're just close to timeline here. So yeah, CV5, as I've mentioned, it's a significant resource, largest in the Americas, 8th largest globally, and it's our first resource. We still have a lot more resource to define across this 50 kilometers of property. So the Corvette property, we believe, is a district scale lithium potential that's significant. We're very fortunate to have consistent large spodumene mineralization and large crystals, lending itself to very simple processing, high recoveries, and that, of course, leads ourselves that we believe we'll be able to demonstrate the permittability of the project, the constructability of the project, to be able to get in line with the demands that we see coming on stream in North America as these battery plants are built out. So we have a number of catalysts. Oh, I'm getting close. We have a number of catalysts defined for 2024. We're going to put out our updated resource in August, and we're going to be putting out an economic study towards the end of 2024. So thanks very much for your time, everyone. And I can drag it out. All right, drag it out. I think, look, this is a great story. We've been very fortunate. The ground is so well endowed with this very richly mineralized pegmatite. We have a great deal of work ahead of us over the coming years and into both getting it into production, but also continuing to demonstrate the scale so that we can actually meet those demands that we see coming down the pipeline in North America. Thanks very much. I appreciate your time.
Thank you very much for that. I didn't mean to cut you off, and obviously you weren't in the room when I was giving instructions, but go and have a chat with him at his stand, please, and get more details on that afterwards. For those of you who weren't in the room when I gave instructions earlier, 2 minutes I'll ring the bell, 1 minute I'll stand up, and then I'll get very close to you, and no one wants that because it's not right and not proper. Right, here's an old friend. No, what happened? You've changed so much, Iggy Tan. Nice. I'm so used to hearing Altech and Iggy in the one space. All right. So there's a little bit of a story behind this next presenter that we've got here, and let me fill you in. So we're talking about the world turning towards electrification of its energy solutions, correct. So Altech Batteries Limited is an ASX-listed company. It is commercialising a sodium chloride solid-state battery project, and that's for grid storage solutions. So it's very, very big. Altech is working with a joint venture partner, the world-leading German government R&D institute, Fraunhofer, and it's commercialising a 120 megawatts, that's correct, isn't it, plant. And that's being constructed on Altech's land, which is in Germany. This, in fact, is the CFO, Martin Stein, and he's here to discuss the project with us. So please make him very welcome, everyone.
Thank you very much. So everyone, what's the future of grid storage batteries? What actually is a grid storage battery? I'm going to get to that, but first of all, I want to touch on the shortcomings with lithium-ion batteries. Now, we know that there's fires and explosions because of the thermal runaway with the liquid electrolyte. We know lithium-ion batteries are limited in their use from about 15 degrees to 35 degrees. They're not suitable for very, very cold climates, and they're not suitable for very, very hot climates. They also have limited lifespans because of the degradation issues that lithium faces, just like your mobile phones. They're limited in their use. They're basically 7 years. And we know that they use a lot of critical materials. They're using lithium, they're using copper, they're using cobalt, they're using graphite, and they're using manganese. They're subject to the supply chains. So what if I was to tell you that there was a battery technology that was completely fire and explosion proof, that lasted for more than 15 years and could operate in a wide range of temperatures, didn't use any lithium, copper, cobalt, graphite, or manganese? Can you believe that? This is Altech's product. It's the Serenergy sodium chloride solid-state battery. Sodium chloride being common table salt. So it's a salt and nickel battery technology. And it was developed by Altech's R&D partner and joint venture partner, which is Fraunhofer. Now, Fraunhofer are German-based. They're a government institute. They're one of the world leaders in research and development, and they've spent 8 years developing this technology. Now, the good thing about these batteries is because they're solid state, they're completely fire and explosion proof. They're also able to be worked in a wide range of temperatures. They can be taken from -40 to +60 degrees. We can take this battery all around the world. We're not subject to temperature conditions. This can operate anywhere. They also have a very large life of over 15 years. Sodium doesn't degrade like lithium does, so they have a much longer life. Now I'll talk about the chemistry about how this battery works. So what we have is a ceramic solid state electrolyte, which is why these don't catch on fire. Inside of that we have a positive nickel rod, which acts as the positive terminal for the battery. We then put sodium chloride and nickel powder inside of that electrolyte, and that whole thing sits inside a stainless steel canister. That is a 250 watt capacity cell. About the same capacity as a residential solar panel. Now, what happens is when we charge the battery, the chloride ions stick to the nickel ions. The sodium ions then migrate through the ceramic electrolyte, and it forms a sodium molten anode, self-forming anode. That's why the chemistry doesn't require any copper, cobalt, graphite, or manganese. It's a self-forming anode, and you can see in the cross-section there how that's formed. So that's what happens when it charges. Now when it discharges, it effectively works the other way. And what happens then is that the sodium molten, the sodium ions migrate back through the ceramic electrolyte, they grab hold of the chloride ions, they form sodium chloride again. Now this is the problem that the world is facing and that Altech is providing solution for. This is a typical electricity grid. It's using renewable power. Now we all know solar power is intermittent in its production and the grid needs power all the time. Now solar and wind around the world are being scaled up. California, for example, wastes $3 billion US per annum in wasted renewable energy that the grid cannot handle. It's been put back into the ground. This problem is exacerbated by EVs coming online, putting additional stress onto the grid. So how do we solve this problem of stabilizing the grid and having power 24/7? The solution is a grid storage battery. This is the future of the electrification of the world. This is what Altech is focused on. Now I mentioned before that Altech's joint venture partner is Fraunhofer in Germany. This project is based in Germany. Fraunhofer has spent the last 8 years, they've spent 35 million euros developing this technology and 25 million euros on the pilot plant facility, proving up. All of the R&D work has been done on this. The R&D risk isn't there. We know this product works. We have 5 and 10 kilowatt battery modules working in the Fraunhofer laboratory. The joint venture now is tasked with scaling up this technology to a commercial quantity. This is some of Fraunhofer's pilot plant facility, sintering the cells 1600 degrees. We have a finished electrolyte. So how are we, as the joint venture, how are we commercializing this technology? That's a finished 5 kilowatt hour module. That's working, that's tested. So how are we commercializing this technology? Well, Altech already owns 14 hectares of land in the state of Saxony in Germany. This region in Germany has been earmarked as a centre for renewable energy and battery technology, and that's where we'll be putting our plant. This product, this Serenity battery, is 100% recyclable. It is a complete cradle to grave product, and we have the ability on our site to recycle this battery in full. These are the building blocks for our product. These are 60 kilowatt hour batteries, and they contain 240 of these cells. What we do is we then take 18 of those 60 kilowatt hour batteries and we stick them into a standard C container design. That provides 1 megawatt hour battery capacity, and this is a product that can be pre-assembled on our site, transported to the customer, delivered on the site. It's a plug and play design, very simple. With 5 minutes of arriving, the customer can have 1 megawatt hour of power on their site. So we've recently announced the financials for this, and we've recently announced the bankable feasibility study. Now, we had some pleasing economics. We have euro 109 million in revenue. We have an MPV at 9% of 169 million euro. We've got EBITDA of 51 million euros per annum. We have an economic project here for the 120 megawatt hour plant. Based on the back of these financials, the board and also Fraunhofer have decided to move to the funding stage. Now, of course, this product will use state-of-the-art robotics. We need that to produce the cells at 1 every 45 seconds. We have selected some of the best robotics and engineering companies in the world to work on this product. Now, this is some of how the cells are put together. This is alumina, and this is what makes the ceramic electrolyte. They're the ceramic electrolytes being sintered at 1600 degrees. That's the final testing. We rigorously test this product to make sure it's 100% working properly. We have a cell being put inside the stainless steel canister, a 250 watt cell. You'll see here some of the nickel powder and the sodium chloride, the salt being measured and mixed to go into this electrolyte. Some of the final welding to encase the cell. This is all done at Fraunhofer's premises. The cell's being fitted. And then some testing that's being done there. So the first stage of this project is to do the 120 megawatt hour plant. The joint venture and the real vision for this company is to take this technology globally in gigawatt capacities. We have the worldwide rights of manufacturing, licensing, and distribution to do this. It's a very exciting industry. It's growing exponentially, and we're excited to be part of it. We welcome you to join the Altech journey. Thank you very much.
Well done, thank you. It's an interesting concept, isn't it? We need to be able to store power in a very large amount, especially over where we come from in Australia. All right, Ronnie Mitchell, come up and join us, please, sir. We're talking global lithium resources now. They're a West Australian lithium company, funnily enough, with a primary focus on the Mana Lithium project, which is in my hometown. It's down in the Goldfields. And they also have one at Marble Bar, the Marble Bar Lithium project, which is up in the Pilbara region. Now, the company at the moment is progressing a definitive feasibility study at the Mana project. As we know, it's a globally significant Tier 1 jurisdiction. There's lots of upside there, and there's a lot of upside as well as far as the exploration goes and the favourable metallurgy. And I'm sure this gentleman will tell us all that we need to know to see if it is the wise investment that we need. Ron, welcome.
Yeah, thanks, Chrissy, and thanks to the team. Great to be back in Singapore. Now, for those of you in the audience, and I'm guessing there's a few of you, be very interested in what the spodumene prices are doing currently. I've just heard unconfirmed reports that the Albemarle 10,000 tonne auction parcel has just sold for about 9,000 RMB a tonne, which puts it at about US 1,300 a tonne, including VAT. And that's a really important price signal, because what it demonstrates is that we're through the floor. The floor was probably now 4 to 5 weeks behind. And we're seeing now sort of sustained improvement in terms of consistency of pricing, and I expect that to continue to improve through the third quarter, leading into the back end. And that's really important because, as far as our project's concerned, one of the very few on the planet that is progressing well advanced through DFS stage, soon to have a mining lease in hand, that positions us brilliantly for when we do see sustained improvement in the commodity price and, of course, sentiment. So here to give you a summary, a quick recap on the company and our projects. We have 2 projects in Western Australia, 2 of the best mining jurisdictions on the planet within WA. Our Marble Bar project in the Pilbara and our Mana Lithium project in the Eastern Goldfields. Collectively, we've got a JORC-compliant resource of 54 million tonnes. We're expecting that to improve on the back of last year's drilling and also further extensional drilling we have planned this year. Great jurisdiction to be mining. The metallurgy we've completed to date is showing some fantastic recoveries, and recovery is important in lithium processing because it ultimately will underpin the financial metrics of your project. We've got 2 wonderful strategic partners on our register, Mineral Resources and also CanMax, and a very experienced team. I think the board and management team collectively more than 250 years of cumulative resources experience in the WA mining industry. And we're value creative. We're well capitalised, 32 million in the bank, and looking to deploy that and grow the project organically and inorganically throughout the course of the next 12 months. Tightly held register, only 260 odd million shares on issue. Great value proposition, the current share price market, particularly with what we're seeing, sustained improvement in pricing. As I said, CanMax and Mineral Resources taking about 20% of the register, and there's 6 companies covering the stock there on an unpaid basis. Importantly, cash at hand. We're fully funded all the way through to final investment decision over the next 24 months. Importantly, CanMax, this is a company that controls about 130,000 tonnes of lithium hydroxide conversion capacity in China. Well diversified, but for those who don't know, they also have some spodumene concentrate processing infrastructure. So we've developed some really wonderful technical insights from this company in terms of processing, and that experience is going to be really invaluable when we take our project forward through the funding stage. And this is a company, and having visited them recently in October last year, really world-class lithium hydroxide processing infrastructure. And the reality is in this market, in the next 2-3 years, if you want to make money in the lithium industry, you need to have a toe in China. I think globally we will be diversified as far as our offtake goes. We're in no rush to do offtake, it's a weapon for us. And certainly sort of 3 key pillars that make us a unique value proposition from an investment perspective. We own both our projects wholly. We are not encumbered through any royalty regimes across our projects, and 70% of our offtake is uncontracted, as I mentioned. Let's talk about Mana. This is a ripping project located in arguably the best mining jurisdiction on the planet. Chowdhury is a mining centre, has been mining various products now for the best part of close to 150 odd years. We're about 100 kilometres east of Chowdhury. Importantly, we've got an operating rail line 8 kilometres south of our project site. And that rail line takes us to a number of export terminals. So we're well advanced in terms of our conversations with various logistics providers, but we've got optionality around our logistics. Exploration's key. We've completed close to over 100,000 metres of drilling now in 2 separate campaigns. Our existing MRE, a resource estimate of 36 million tonnes, is based on a single year of drilling. We've got the 60,000 metres coming through as part of an MRE update in Q2 that will be delivered. And about 60% of that drilling was infill. And what we've found through that infill drilling campaign is the grade is lifting, we're getting great continuity, and the resource is still open. So the focus of this year's drilling, far more targeted, is going to be on extensional drilling. And the idea there is to improve life of mine and add significantly shallow tonnes to this resource, which will improve the economics. So the geology team's very excited. We've got a stacked multiple pegmatite ore body here, terrific grades, very, very consistent high grade. And what we're seeing is that the undercover part of the ore body to the south is showing great potential through some very late hits we received as part of last year's exploration campaign. So we'll be drilling around 6,000 metres, and that campaign will kick off in a matter of weeks. I mentioned earlier DFS and de-risking is critical, particularly to coincide your project as being the next near-term producer, and that's exactly what we're angling for. We've been now embarking on this DFS for the best part of 12 months. It's advanced, and this project now subject to some optimisation work. So we're using GR Engineering Services, a fantastic EPC company based in Australia. They're doing some CapEx optimisation for us currently. And SRK, we heard one of the gents from SRK talking earlier. They're undertaking a separate technical review, peer review. So when we do deliver this project to market, it will be bulletproof and competitive. So we're super excited. As I said, one of only a handful of companies on the planet in the lithium industry that is at a DFS stage. And to get to a DFS stage, you need a lot of things. You need a team, you need to spend a significant amount of money around metallurgy, the DFS campaign itself, and of course all the optimisation and technical de-risking streams that need to be part of your DFS. So we're thrilled that all the heavy lifting's behind us, and we'll get to announce some great results to market in the coming quarters. We've also completed a really substantial metallurgical test campaign, and metallurgy is everything. The work we've done here collected around 12 metric tonnes of core, and that's been used in 66 individual flotation tests. And the results of that test work in particular has improved the recoveries. We're now achieving consistently around 75% recovery. And that's through the run of mine all the way through to the final concentrate. And those are exceptional recovery rates. And that matters because it ultimately will drive your project economics and your NPV. So we're thrilled with the results thus far, but we've got some additional optimisation work we're looking to continue with. We've got a unique ore body, very high grade and very low in gangue mineralisation and iron, and that's a unique advantage that we have. The other core part of any project, successful project, is approvals and permitting, and again, well advanced. We submitted a mining lease application in April of last year. We're at the advanced stages now of our NTMA, our Native Title Mining Agreement, at the very pointy end of that negotiation. And we are expecting conclusion and execution of that agreement in the second quarter of this year, which paves the way for the company receiving the Holy Grail, which is a mining lease. And we're hoping to receive that in the third quarter. And again, if you look at the timing and that data point with regards to Albemarle's auction I mentioned at the start of the presentation is really important because we're seeing now sustained improvement, and I expect in the third, fourth quarter, sentiment will return to this sector and we'll be a company that has a mining lease in hand. So it puts us again in a wonderful position to execute, take the project to a final investment decision in the next 12 months. And lastly, just on the environmental approvals, that's the other very key component. We've got no priority 1 species identified. We've completed all of our flora and fauna surveys on site, and that paves the way again for our environmental permits and approvals to be accepted this year. Just a couple of photos of the project itself, and just lastly, the milestones. Busy year ahead. There's a lot of strategic growth opportunities for us as a company. But again, metallurgy, exploration, our approvals, and of course that DFS, which we'll be putting out in the market the back half of this year. So great time to be in the industry. If you want to know more, please come and see the team at booth 1. We're just behind that flashy Polestar. So thank you again, Chrissy.
Thanks, Ron. What are you behind? Ron, what are you behind? The flashing... He's gone, he's off, single-minded. There you go, that's right. They say that about men, you know. You can do one thing at a time really, really well. Women have got all these little... It's true, scientifically, we've got all these bits going across our brain. You guys have got one super highway, so you do one thing at a time well, we keep other things alive. It's just a scientific thing. I'm not doing a sexist thing at all. All right, let's go back to mining, because that's obviously why you're all here, not to hear me chirp on. James Croser is joining us up on stage. You had a busy year last year, James, so I'm sure you'll keep us up to date with what's happening with Delta Lithium, the state of play at the moment and the prospects for the future. Would you please make him welcome, everyone? Delta Lithium.
Thank you very much. It's wonderful to be here in Singapore, and thank you, Vertical Events. So who are we? Delta Lithium. We are a Western Australian-based lithium development company. We have 2 very good assets based in Western Australia, 2 lithium assets. the Unathara project near Gascoyne Junction, and the Mount Ida project near Kalgoorlie. We have a very strong balance sheet. We have over $100 million in cash, and we have a very significant register, in particular our top 4 shareholders holding some 55% of our stock. MinRes, Hancock, Idemitsu and Waratah provide us with a very strong strategic benefit when indeed we do develop these assets into mines. Our board of directors is made up of Chairman Chris Ellison, needs no introduction as the Managing Director of Mineral Resources. He's joined by Joshua Thurlow, his executive in charge of his lithium division. Yours truly in the middle there, between Steve Kovac, the CEO of Idemitsu Australia, and joined by non-exec directors Tim Manners, a very experienced high finance accountant, and Nader El Sayed, a self-made entrepreneur, civil resource contractor. This board provides us with a significant amount of lithium experience, entrances into Japanese and Southeast Asian markets through Idemitsu, and provides for some very lively board discussions, I can assure you. So our main aim is to rapidly develop the lithium assets we have in Western Australia. We have the team to do it. We have significant experience in Western Australia, life of mine vision, a very strong team in the Perth office looking at all aspects of our business. Our major shareholders provide us with a very strong backbone and grounding, and as I said, when the time comes to develop these assets, they will be there for us. The location of our assets is in arguably the lithium capital of the world. We have 40 million tonnes of resources in the ground at over 1% at our Mount Ida and Unathara projects, not to mention a small but quite important gold resource at Mount Ida. What are the upcoming catalysts for our business? Well, we're exploring extensively at Unathara. We have 4 rigs up there at the moment. Talk about that in a minute. We're progressing studies at both of our projects to push them towards the go line, and we are looking actively for growth opportunities at this stage of the commodity cycle. So our Unathara lithium project, it's located about 2 hours northeast of Gascoyne Junction. It is, well, I was there a few weeks ago. I think I maxed out the thermometer on my Toyota at 50 degrees Celsius. It's a very hot part of the world, and our team's doing some fantastic work up there, exploring far and wide across our 1,800 square kilometres of the project. We've been primarily at the Melinda, or exclusively drilling at Melinda since we acquired the project in late 2022. We've drilled over 100,000 kilometres there, and we've barely scratched the surface. We've got a lot of work to do. There's a lot of pegmatites to be found up there and explored. There's a plan view of Melinda, 6 main pegmatites. We have found the majority of them do exhibit significant widths, very high grades. The M36 there has a very high grade core, up around 2%. The M1 is in excess of 1.6 kilometres of length. We've drilled that to 350 metres, and it remains open in several directions. We've done some early metallurgy test work to help lead into the scoping study. The recoveries have averaged about 69%, very high 6.4% con, quite clean, very low iron impurities. It's early days there, but we'll be working on obtaining core for those further tests. The maiden resource at Melinda, we brought that out late December, 29 on 26 million tonnes at 1%. About a quarter of that is in the indicated category. We're going to be drilling hard there. We've got about 100,000 metres to drill this year. A lot of that will be infill on that resource so we can turn it into a reserve in due course. All of the associated scoping study activities, heritage, environment, geotech, hydro, you name it, it's all happening at the moment. The early optimisations on that mineral resource have been quite encouraging, and we'll be lodging a mining lease application at Melinda very soon. So what else are we doing up at Unithara? It is a very large package up there. Whilst we've been drilling at Melinda, we have gone far and wide out into our tenure. The recipe that we employ is geochem sampling across the landscape on 100-metre centres generally, and geological mapping at the same time. We want to determine the hot spots for lithium anomalism, and it's been very effective, particularly at our Jamison's prospect. There's a 700 by 200 odd metre anomaly there, which we have recently cleared for drilling, and well, the drill rig should be on its way there right now, actually. So we're quite looking forward to drilling there. And we've got about 15 or 20 staff up at Unithara at any one time, and they're running around the scrub looking for further prospects for us to drill, add tonnes to that project. We've recently added tenure at Unithara, did a couple of JV deals. It was quite difficult herding both of those companies together to execute on the same day, but somehow we managed to do that. It almost gives us full control of what we believe to be the prospective stratigraphy up at Unithara, that is the Leaf Springs metasediments, and we are very happy to have secured all of that tenure, and the Dallaroo tenure to the southeast, very much greenfields down there, and our field teams will be getting out to have a look at that in due course also. So the Mount Ida project, this was the project that really kicked it off for us all in 2021. We've defined a 15 million tonne lithium resource there, quite high grade, 1.2%. We've drilled about 200 kilometres there. We did release lithium and gold mineral resource estimates last year in the third quarter, and we've been working on the tie-up of those two resources, how they improve the economics. It is a wonderful asset, it's geologically unique, and we very much look forward to leveraging off the gold to improve the economics of the lithium, or vice versa. There are 5 gold plants within about 200 kilometres of Mount Ida, and we'll be able to monetise that gold in due course. Provides us with optionality down the track funding. A lot of people ask me about the gold and the lithium together at Mount Ida. They are in separate rock units. We will be able to mine them discreetly and separately, potentially from the same capital, which does provide us with a bit of a free kick. We've recently had the Sparrow mining lease approved, so all of the lithium and gold resources at Mount Ida are on mining leases. So why Delta? We have a fantastic lithium exposure. We have 40 million tonnes of maiden JORC in excess of 1%. We're very much leveraged to the rebounding commodity prices. I very much appreciate Ron's optimism on that one also. A very strong balance sheet, strong partners, strong backing, able to maintain the long-term vision. Here comes Chrissy. And we have high-grade gold, which gives us very much a commodity hedge and provides optionality. Thanks very much.
Well done. Well done. All right, the expertise of the next person to come up on our panel has been sought around the globe in a number of different industries. We're talking mining, cement manufacturing, power and utilities, oil and gas, metal, renewable energy, financial institutions, the list goes on. But as I said, he is in demand across the globe. Today, we're lucky enough to have him here, and he's going to talk us through navigating ESG considerations in the exploration and mining sector. Would you please make welcome Sumit Chowdhury from Intertek Minerals. Welcome, sir.
Thank you. Good evening, everyone. And first of all, thank you, the event organizer, for hosting me here. So I'm Sumit Chowdhury. I'm Senior Manager Sustainability with Intertek. So today I have been invited to talk on the ESG and how it is impacting the mineral or mining or exploratory companies, right, or the sectors. So let's begin with, these are the topics that I'm going to cover today. So as you see, we have sustainable mining and ESG, significance of implementing ESG management, case studies, a couple of case studies, then key aspect of ESG navigation, and what are the top ESG trends in the mining industry that we will have a look. So before going forward, I would like to give you just a hint that today our global leaders, they use the term ESG and sustainability interchangeably without knowing the thin line difference between that. When we talked about sustainability, it's basically the overall umbrella. And when we talked about ESG, it is very specific to organization. So in today's presentation, I'm going to use ESG as well as sustainability interchangeably. So please excuse me on that part. So now let's talk about the sustainability, sustainable mining and ESG. As we all know that in today's world, mining is becoming crucial. So the intersection between the ESG and the mining industry are becoming more significant. So, and when we talked about sustainability, it is totally defined by the Sustainable Development Goals. As you all know, in United Nations, there are 17 Sustainable Development Goals are there, and the mining industry on this sector, are directly or indirectly impacting all the Sustainable Development Goals. But here we are going to talk about a couple of SDGs, which are being directly impacted by the mining industry. First one is the, no poverty. Means, as we all know, mining industry is having a very good potential in, creating a lot of, socio-economic developments. So these goals have been addressed. Secondly, we do have goal number 8. Talked about, decent workforce and economic growth. We all know that, mining industry has a potential to create a lot of, employment, trainings. And similarly, it also help in, creating a lot of infrastructure development work around the communities and the societies. So it will also, target or addresses the goal number 9. Apart from that, the most talk about goal is the climate change, because we all know mining industries are causing, a lot of GHG emissions because of their extensive energy utilization. So, but because of new technologies are coming up, if we adopt a sustainable approach while doing the mining, these GHG emissions can reduce, and it will definitely impact the climate change that we have. And apart from that, we do have goal 16s, which talked about peace, institution, and all those stuff. So we know the mining industry has a potential to create a very a very peaceful environment among the communities if they work well. So I believe, these are the goals that, mining industries can impact on the sustainable front. Now let's talk about the ESG risk and opportunities. We all know that, mining sectors are available all across the globe. So it can be very, based on the context, based on the region. But there are few or couple of, ESG risks that we have identified are common in nature. So let's talk about the first, environmental risk. So as we all know that mining industries are doing, a lot of stuffs and all those things, and because of that, resources have been depleted, right? So because of that, a lot of pollution, whether it is soil contamination, water pollution, all these things are happening. And other than that, climate change, as I already mentioned that, mining industries are using, extensive energies during their production phase, during their, downstream utilization phase. So these are the risks that we have in place. But when we talked about risk, there is an opportunity. If we mitigate those risks, it will qualify for the opportunities. So if we work on sustainable mining practice, or if we adopt sustainable mining, it will definitely mitigate all those risks. I won't say it is going to reduce all those risks to a negligible level, but yes, it will create a lot of difference. So, and apart from that, companies or the mining sectors, they need to invest on clean energy technology, whether it's renewable or CCS, carbon capture storage, and other the other technologies that they have, or which used for clean energy transition. So these are the opportunities that we have in the environment section. Similarly, when we talked about community relation, labor rights, indigenous rights, so these are the few social related risks that we have, because we all know that whenever a mining or exploration sector is working in a community, there is a chance of community conflicts because of various reasons. So I'm not going into that detail, but conflicts can be happen, and because of that, indigenous peoples and their rights have been compromised. So these are the things, and apart from that, when we talked about labor right, it basically includes your wages, occupational health and safety standards. These can get compromised, and it will impact your reputational, reputation or your market values. So these are the risks, and apart from that, there are a couple of opportunities are available. If you work towards the development of the communities, if you invest in the infrastructure where you are working, that will help you out tremendously. And the rest is the governance risk. When we talked about governance risk, it is basically corruption and bribery, because we all know that in order to get a lot of environmental clearance, a lot of permits, we generally intend to you bend towards the corruption. So it is creating a lot of impact, and it will create a lot of reputational risk. It will degrade your market values. And ethical supply chain. So we have seen that supply chain are getting impacted because a lot of labor abuses are there, unethical supply or the procurement are going on. So these type of things are very much common, and these are the risks that we need to look upon. So now, what are the key drivers for ESG integration into in exploration and mining sectors? So we have identified a couple of them. First is the regulatory pressure, because we have seen that in many regions, disclosing of your ESG data and performances is becoming mandatory. For an example, in EU, we have CSRD, right, which is going to be implemented by 2026, means company need to disclose their 2025 data and performances in the year 2026. In India, we do have BRSR, that is Business Responsibility Sustainability Reporting. So, top 1,000 companies, they need to disclose their ESG performances. Similarly, in Hong Kong, Hong Kong Stock Exchange, they have made mandatory for all the listed companies. In Malaysia, we have Bursa. So, everywhere we have seen that, even in Brazil, South Africa, in Japan, we have seen that type of things are going on because of the regulatory pressure. Companies are forced to publicize their, ESG data and performances. Second, the most important is the investor and the market driver. We all know that investors are keen to invest in those organizations which are having good ESGs, and that we have seen in this in the recent years. So I think this is one of the important key drivers that we have. Other than that, we have pressure from the NGOs and the communities, because whenever a mining company start mining and they are doing operation, a lot of time conflicts may happen, and because of that reason, NGOs and communities, they are creating external pressures on the mining companies. So if a mining company is having a good ESG standard in place, they can able to tackle those situations diligently. And the rest, but not the last, but that is the proactive measures, because many mining companies, they want to be the leader in the ESG front. So they develop their internal system in such a way that it can it can be an example for other companies. So maybe in past they have faced any any incident, any problems. So from their learnings, from past learnings, they have come out with a solution that they need to develop ESG standards, policies and everything. So these are the few key drivers that we have in place. Then what are the significance of implementing ESG management? So, we all know that whenever we are talking about ESG, it will cost you more because, because of compliance cost. Because if you talked about ESG, there are, stricter rules and regulations that you need to follow, which may trigger to use high quality equipments, need to set up high process. So that may cause, a lot of costing. Apart from that, operational costing, because if you want to good in the ESG front, it means you are talking about, investment in new and the clean technologies. You will talk about, proper waste management, water recyclability, good tailing management. So, all this thing, basically encourage high costing on the operational side. And apart from that, there is one more costing that is related to ESG, that is reporting and monitoring. So whenever you are talking about reporting and monitoring cost, it means you need extra manpower. You need to give training to that person, to that team. That will, of course, add up to your administrative cost. So when we talked about ESG, yes, ESG has a means it has a upfront cost, but there are various advantages of implementing ESG. First is it will help you to mitigate your all type of risk. We have seen that it will deal with your community. It can deal with your compliance related risk, reputational related risk. It will improve your performance. If you talked about good ESG things, your people will get good training. They will get motivated, and performance will increase or enhance. When we talked about enhanced stakeholder engagement, it will give you an opportunity, to talk to your community, to talk to your investors, different stakeholders, so that you can get a, more positive feeling and, all those stuff. Access to capital, as I already mentioned, that investors are keen to invest those organizations which are having good ESG, ratings or good ESG performances. And access to capital is getting a lot more easier. And the last but not the least, that the market differentiators. If you have a good ESG in place, you can call yourself the, market differentiator. Why? Because right now the millennials or Gen Zs are looking on those, organizations which are having proper ESGs, and they can relate with those organizations. So that's how you can, create a lot of, differentiation in the market. Then, process of setting an ESG management system, it is very important because I believe many of us are new to this sector and we are not aware how to start, the ESG management system. So first we need to assess the maturity level, because many companies, they have the ESG in place, but they don't know that they are actually doing it. So it is very important for them to identify their maturity. Then need to do the diagnostic study. When I say diagnostic study, it basically includes your materiality assessment and your peer assessment. Through materiality assessment, you would come to know what are the important topics for your organization that you need to work on, and accordingly you can set your ESG targets. And the peer assessment means, you need to understand what your peers are doing, because ESG is never been a, a competition. You need to look at this thing at a very, positive way. So apart from that, you can identify roadmaps, what you need to do in a couple of years, on short-term basis, on long-term basis, then you need to implement that. And apart from that, monitoring, reporting, and assurance, these are the things that you can do. So I would like to touch upon a case study. Recently we have done a, work for a company in Asia, and for whom we have developed their sustainability report. But the major challenges that we have faced that, they are very new to this sector. So it is very difficult for us to, help them out because they are understanding on the ESG at a very, nascent level. But the learning that we that we gain is that, before going into that thing, we need to do their capacity building. So I would like to skip the second case study. Thank you. So, so thank you. So these are the top, trends that we have seen. On environmental, you have seen that net zero acceleration. Then we have, a biodiversity telling management system.
What booth are you at?
Pardon?
What booth are you at?
27.
That is correct. And that is where everyone's going to go to hear the rest of this talk, because you've led them in like a good Netflix documentary and they will come and see you, I promise you. We have to leave it there, sir.
Thank you. Oh, thank you.
I'm very, very, very sorry.
If you have any query, please come to booth number 27. Thank you.
Thank
Namaste.
you, sir. My apologies. All right. You could have actually talked after everyone is coming onto stage now. We're going to be talking lithium after the fall. Now, none of us in this room know lithium like the moderator of our next panel, Mr. Lithium. Joe Lowry is joining us on the stage. And I bet, though, after last year, he had a very long lie down after we drew a line under Lithium 2023. And if you've been following any of his podcasts or his writings in the last couple of months, you, like me, may have been introduced to a few new words or perhaps some old words that he's resurrected, one of them in particular. None of them were swear words, which was good, Joseph. Your mother would have been impressed. But I love the use of the word prognostication. Nothing like a good old prognostication. You're not going to say, yeah, I like that. Prognosticator. So he had 1,000 other prognosticators who all got the price for 2023 wrong. There'll be a quiz on this with Dr. Seuss afterwards. And the other one, though, that you brought out, which I'd never heard before, and I think Dr. Seuss would have been impressed, you did make this up, was a lithium enema. That's your own title.
Lithium enema, yeah.
A lithium enema. So with that in our mind and the knowledge that you are indeed the expert, I'm going to hand over to you and let you introduce us to your esteemed panel. Would you please make Joe very welcome, everyone?
All right. Anthony C., who is now known as the #1 lithium free agent, rather than the former chief executive of Galaxy Resources. Dr. Francis Whedon, the executive chair of Vulcan Energy, and a repeat guest from last year, John Worth, the DLE guy. All right, we're going to start off. And we're going to get you out of here for drinks really quickly. This is going to be painless. Hopefully you're all awake in 15 minutes. But the warm-up question, we'll start with you, John, and we'll just go down the line. Tell us about your feelings about, since, we've called this panel After the Fall, which, I don't know, I think that was a Brad Pitt movie. But how are you feeling about lithium sentiment right now?
It's interesting, isn't it? Not many commodities are as susceptible to price swings as lithium, right? You don't see this in the base metals to the same extent. So I think you have to look at what's happened in lithium with a grain of salt and say, are the underlying fundamentals still strong? Our belief is that they are. Anybody who's driven one of those Polestars in the exhibition hall, knows that our next cars will be EVs because they're better, right? So that means the fundamentals are strong. And while we'll see some price volatility, our project number hasn't changed. We still think projects should be modelled at $20,000 a tonne LCE. So we think it's an anomaly, but stay strong.
Francis?
Well, I would tend to agree. I only know essentially 3 markets in the world that are growing at the compound annual growth rates that we're seeing in the lithium sector. It's lithium, batteries, and EVs, essentially. So, honestly, the sentiment hasn't changed when you speak to off-takers. We've got exclusively European-based off-takers, and the sentiment hasn't changed since 2021, when obviously the price went ballistic. I lost power there. Maybe I'll defer.
You got power?
Yeah, I think so. Do I have power? No.
No,
we're all off. Yeah, I'm back.
There you go, you're back.
Just to finish off, so I mean, the demands from off-takers hasn't changed. Obviously, as we all know, it's a tiny market that's growing at a very fast compound annual growth rate. So I think we're going to continue to see those very sharp oscillations upwards and downwards. Hopefully, it will smooth out as the market matures. But overall, I mean, our sentiment hasn't changed. As John said, people are still buying EVs, and the transition is still happening.
Anthony.
Have we not seen this movie before, Joe?
I think we have.
So I don't have as much grey as Joe just yet, but this is my now third cycle. And I think from when I started in the industry to now, you're looking at, in terms of 2024, you're looking at a 10x larger market than how big the market was when I first started over a dozen years ago. The second thing is, in terms of every reset that we've had in the cycle, and this is now my third cycle of ups and downs, versus the last cycle, we've basically reset to a level of, our lows are now today. I mean, I think you saw, some of you may have seen, there was latest some chatter online about the auction price that Albemarle achieved in terms of its latest spodumene auction, which was around, it works out to be about $1,200 CIF China for us SE6 grade. And that is essentially at least a 3x higher than where our previous low was in the last cycle. And our highs versus the last cycle was at a 5x higher price. So we're resetting, and everyone seems to be freaking out a little bit and saying, oh, my goodness, prices crashed down to about $1,000. But anecdotally, in my last trip to China about 6 weeks ago, just meeting up with a couple of strategics who actually picked up assets in Zimbabwe over the last couple of years and have since brought them online. To summarize, they're basically having to slow down or turn off some of that production because, in inverted commas, they can't make money at $1,000 spodumene. And so that kind of gives you a sense of where I think we are in terms of the price cycle. I'm sure, Joe, we're going to talk a little bit more about all the new units that may or may not be coming online. But in terms of general sentiment, we've reset to a much higher level than where we were 5-6 years ago in that 2018, 2019 peak and kind of the subsequent downturn since then. And as Joe and I have exchanged kind of discussions online and on panels, some of the other, I guess, consulting reports that you see out there, which paints a very doom and gloom picture because EVs only went from 10 million vehicles sold in 2022 to only 14.5 million vehicles sold in 2023. If a 35-40% year-on-year increase in demand is a bad year, I think, Joe, as you put it, I hate to see what a good year looks like.
Well, let's stick with China for the moment, Anthony, and we'll go back down the line, starting with you. And how do you see the significance of the Guangzhou Futures Exchange in the discussion? Because you see a lot online about those numbers. And what's going to be the next price discovery tool that people use?
First and foremost, to quote Mr. Lithium, there is not one price in lithium. We have a range of pricing depending on what product you're taking in which part of the world and whether you're on contract, off contract. So there is no price singular discovery. There are prices to be discovered. And to pin all hopes and sentiments on an indicator, whether that indicator is a published price from a PRA, from a price reporting agency that's a Western agency, it's a Chinese agency, it's a Japanese agency, or it's from a futures exchange. I mean, from an exchange perspective, lithium, the vast majority of lithium is not exchange traded, it's bilaterally negotiated, bought and sold. And so the volume of material that actually goes through exchanges is very, very limited. To the extent that, for the cost of a car or even less, you could probably move the futures on a quiet day by a few hundred basis points. I mean, that is the level of potential for manipulation on futures price. So I ascribe very limited indicators of sentiment to whether it's the Wuxi or the Guangzhou Futures Exchange. Secondly, I mean, we've seen this in other materials as well, and I stopped short of calling lithium a commodity, but we do see it in some commodities. For example, you know, we have an LME price for cobalt, but the liquidity that's traded on the LME is so limited that it's not really represented. So, you know, your price discovery then actually has to go into more proprietary channels in terms of really understanding a mix of both spot prices that are being reported, as well as kind of industry discussions, as well as importantly, customs data, which is actually an accessible but often overlooked source of price discovery, whether that's import prices going into Korea or Japan for chemicals, or it's export prices coming out of South America. So those are the kind of the myriad of data points, along with the PRAs, whether it's from Asia or it's from Western agencies that you can use as a basket of tools to arrive at a price discovery mechanism.
Let's move back to Europe. And Francis, tell us a little bit about your project, and then how you see supply shaking out over the rest of this decade in Europe, whether it's from European projects or from conversion being built in Europe.
Sure. So, well, we're actually a renewable energy company at the moment, who are building an integrated renewable energy and lithium project. So we're actually producing geothermal renewable energy from brines at the moment, and what we've been piloting for the last 3 years is extracting the salts from those brines using an aluminate-based adsorbent of the kind that was invented by Dow in the 70s. I'm sure you know, Joe. Yeah. Essentially using electrolysis in the back end, making a lithium hydroxide from that. So it's integrated renewable energy, lithium salts and lithium chemicals. And the idea is to do this in a net energy positive way, so produce more renewable energy than we consume, thus having a carbon neutral footprint. Back to Europe, I mean, we think we can certainly play a part in that market. Phase one is 24,000 tons per annum of lithium hydroxide. And we see the potential for further phases ahead of us. However, I mean, we can only grow so fast. We are, you know, capital constrained, we're people constrained with how quickly we can grow. And clearly, you know, Europe's demand for lithium is well in excess of that. So I think our supply is really not going to touch the sides in terms of that demand. There are converters being built in Europe. They need supply from overseas. The hard rock production in Europe, well, there's no production at the moment. Some very small for the ceramics industry, but none for the battery industry. And so most of this, the supply that's due to come in is either supposed to come in from Canada or Africa. I'd say it's looking problematic, I think, to fulfill that demand into the European market. So we'll certainly do what we can. I note as well that there are others pursuing the brine routes on the other side of the border as well, on the French side. I think the Upper Rhine Valley, a bit like the SMAC over in the US, I think it really has potential to be a big supplier of lithium into Europe. So we welcome others coming and setting up next to us. It's a big field. I think that can play a big part in increasing production for the European markets. But Europe is challenged in terms of its demands over the next few years.
John, you were on the panel last year, and I think we closed by me calling you perhaps the most optimistic person I had met in Singapore. You've had a big year, so I know you presented earlier, but if you could just recap where you think the progress is and where DLE is going in general over the rest of this decade. And if you want to put a tons number on it, we'll take that too.
Look, it's interesting, Joe. I sat here a year ago and said we would be out in the US and Canada, a real focus on North America and brines. And I think that's exactly where we are. We're now out on the road in the US and Canada. We're working our way from California down through Texas and then up through the middle. So we are where we expected to be. I think, what's interesting about North America is the degree of readiness on the brine side. There's a bunch of guys still pegging land, and oil and gas industry is just starting to really work out the potential of lithium. And so we're sitting there as a tech company saying, right, we want to be part of this. And it hasn't moved on the resource side perhaps quite as fast as we thought it might have moved. But now that it has moved, there's sort of this huge motivation to climb into it and to make something out of it. So, our big job this year is to figure out where we go at demonstration scale. So something that's doing sort of 200 to 500 tons LCE, to get one of those up, possibly two, potentially one on each side of the US-Canadian border, and really demonstrate that a whole range of these resources can make sense. Oil and gas brines, potash brines, clean formation waters. Very much an extension of what we've been doing in New Zealand for the last decade on geothermal brines. So we're very bullish about North America. We think it's enormously investable. It's probably got the best federal sort of support regime on the planet. Other jurisdictions are struggling to catch up to make sure they don't miss out, and that's great. That's good for lithium wherever you are in the world. But I think for us it's still very much a North American story. And then our job is the same as everybody else's, to get up through those stages, get to your first 5,000 ton kind of module, and then get to 30, which is a real project. So we're on track in terms of the things I talked about last year.
Okay, you're going to give me a 2030 number, a 2032 number, or have we backed away from those numbers?
No, look, the DLE imperative is still there, and I think what's an unknown is who can put together, they're really simple ingredients, right? You've got three things to do. You've got to find a great resource, a tech that fits it, and someone to sell the product to, right? And I think that's what we're watching to see where those best opportunities are, right? You've seen some of those emerge, if you think about what the standard's doing, right? But there's not enough of those yet. There's not enough of those trifecta pieces glued together and getting into production. So that's the unknown.
Anthony, you're the China expert, but there's a move to have China-free supply chains. How do you view that, and how practical do you think it is to try to engineer around China building a lithium-ion battery supply chain?
So even if we were to take geopolitics out of it, I think as an industry, as a global industry that's growing so fast and has demands from all parts of the world, it makes sense whether you're making lithium raw materials or battery components or actually PPE or pharmaceuticals or anything else, to actually have not 80, 90%, 95, 98% concentration of any production of any material in any given part of the world, given what we've seen in the aftermath of whether it's COVID, whether it's conflicts that we see today, whether it's a ship captain that falls asleep at the wheel going up the Suez Canal. We've seen how much disruption can play a role in terms of the global supply chain today. So I think it's a much more broader kind of emphasis in terms of rejigging that supply, way, way beyond, I think, just the geopolitical discussion. So that's the first thing. So yes, globally, we have demand in all pockets around the world. It obviously started off, with the lithium-ion battery demand primarily driven out of North Asia, led by China, Japan, and Korea over the past couple of decades. But we have new pockets of demand coming up in Europe, in North America, while it's still, small. China represented about 9.5 million vehicles out of 14.5 last year. 2.5 of that came from Europe, 1.5 came from North America, and the rest of the world made up the other 500,000. So we do have new demand coming from different parts of the world. There is a need also from not only a supply chain disruption perspective, but actually from a logistics cost. We're living in a much more aggressive and hyperinflation environment now. Cost of moving materials from A to B is a lot more expensive. But also just thinking about it from a sustainability perspective. I'm a first generation Tesla owner. The lithium unit that is inside my car, and I live in Hong Kong, started off life at your old company, Joe. Right? Got made in got produced in Argentina, then got sent to Bessemer City to be made into a hydroxide. That hydroxide unit then got sent to Shikoku Island, where Sumitomo Metals and Mining kind of converted it into an NCA cathode. By the way, they then shipped it back to Osaka to make it into a battery cell. That battery cell then ended up in Reno, Nevada to get assembled into a pack. The pack then got trucked on a lorry to Fremont, California, and then Tesla's shipped it over to Hong Kong to me. So the number of air miles that my lithium unit inside my car does is probably more than I fly today. So it does make sense to try and shrink those supply chains and to regionalize kind of hubs of capacity around the world. So that's the positive, that's the upside, that's the aspiration. Where the challenges lie, I think, are threefold. Actually, probably four. One is the technology. Two is the experience. We're standing up capacity in different parts of the world where it's never been done before. And yes, there's a lot of innovation and technology that's around the world, but the third part, which is the capital component, does not like risk. So it's always looking for the path of least resistance in terms of funding projects that not only have strong economics, but also have the strongest profile or downside protection in terms of risk profile of the project as well. Whether it's a conventional resource, an unconventional resource, whether it's a conventional jurisdiction, for example, Australia, Canada, Chile, Argentina, where lithium historically has been produced, or it's an unconventional jurisdiction where it's never been produced before. For example, Mali, Ethiopia, South Africa, different parts of the world, Central Eastern Europe, Western Europe. And then capital is also a lot more scarcer now. And that's exacerbated by the fact that cost of projects have also gone up tremendously. So even if I just pick one jurisdiction, my previous company basically built a lithium mine back in 2010, 2011. By the time you fast forward 5-6 years and you saw Pilbara and Altura came online, the cost of capital of building a similar size mine was at least double. It's probably 2.5x. From where we are today, back to that last cycle when Pilbara and Altura came online, it's another 2-3x from there. So capital intensities have continued to go up. So when I first started in the industry, your average cap intensity, especially for South American brines, was somewhere between 12 to 16,000 US dollars a ton. The best proxy that we have from South America today is most recently Chowdhury from Lithium Americas. They just closed out their tab for $987 million for 40,000 tons, right? So that's a 25,000 ton LCE. But when you're looking at other parts of the world, when you look at conversion capacity in Australia, it's anywhere between 5 to 7 times more expensive than doing the same conversion capacity in China. When you're looking at integrated capacity in North America, in Europe, again, you're looking at 5 to 7x compared to that of building the same capacity in China. So if you think about capital, it would always kind of look to optimize returns. And if it's going to take that much longer to generate returns on capital, then what kind of price do we actually need to justify the economics of those projects? And so that is a challenge, but it's also an opportunity. It's an opportunity for disruption. It's an opportunity for companies like Francis and John's to actually try and figure out the Rubik's Cube of trying to do this thing a little bit cheaper, a little bit quicker, a little bit less expensive. But every single project, I mean, I probably spend more time now wearing a private equity hat looking at projects around the world. And I know that for a capital intensity of 1 in China, if I built the same, whether it's a lithium conversion plant, or it's actually a cathode on anode plant, or it's a recycling plant, or a precursor plant. If one was to do the same in Southeast Asia, for example, in Indonesia, you're probably looking at 1.5x. If you're looking at Morocco, it's somewhere between 1.6 to 2x. Central Eastern Europe, 2.5 to 3.
I want to get the price here for a second before we're running out of time, and I know, she's going to come over here and hook us off the stage. Francis, you're looking at a lithium project, 2024 and beyond. What do you put in your price deck? What's a reasonable, what will the investment community accept, and what do you think is reasonable to put in a price deck going forward?
I can't tell you obviously the exact number, because I'd have to kill you all, but No, we have five different offtakes in place. Those were put in place between late 21 into 22. And what we've tried to achieve is stability. So we have some fixed pricing in there and some floor ceiling. I think to give you an idea, it probably would have looked on the low side in sort of peak, 21, 22. I think now it looks really healthy. So I think we put out an average number which was plugging in the fast markets forecast overlaid onto our offtakes because they're somewhat adjusted relative to the contract pricing index. I'll have to check the exact figure, but I think we ended up at about 25,000 average per ton. That's for the first few years of the project during the payback period. I think it's good for us. It provides stability for us, for our customers, and it's good for the end user, right? The EV customer at the end. So yeah, I mean, for us, the key is stability, low cost of operation, and stability on pricing, and making sure those returns are baked in.
Last question, John. Has price bottomed? And if not, when? Easy question. There's 46 seconds left. You got this.
There's only one right answer, which is, of course, it's bottomed. Whether that's true or not, time will tell. Look, I think the comments on the stage have been bang on, right? That we don't want to get too upset or too excited by the Chinese spot price, right? The price that matters is the one that gets your project built, right? And that's going to be a contract of some sort. It might be swung around by spot and by a metric of sorts, but that's the price that matters. And I think what we're particularly excited about is to see the market thickening. And what I mean by that is we've had people come at us and say, we want to buy your chloride as an intermediate product. And this is a natural function of excess capacity in the market. There's now more, if you said on the stage here 2 years ago you were going to make an intermediate product, you would have been laughed off the stage. Right? You've got to make chloride or you've got to make carbonate or hydroxide. Right?
Okay, the angel of death's coming, so we got to close this out. I want you people all to enjoy your adult beverages. Thanks for playing.
I wasn't even looking at you menacingly. Actually, you did really, really well. I'm impressed. I just stood away because you are Mr. Lithium.
Hey, when it goes red and you come up in red,
you knew you were
I
hot
get
for
off
it.
the stage.
All right. Would you please thank Joya and the panel, everyone? Thank you, team. Really appreciate it. I've got a little quick memory recall for you before you go out there, because the reason you're able to go out there and enjoy a drink and some food is because of a certain company. So, Sumit Chowdhury, the gentleman who likes to talk longer than Joe. Do you remember what the company was that he works with? Intertek. That's who we are thanking for our drinks. So when you go out there, thank them. Perhaps catch up with the rest of the story. Thank you for your patience today. Thank you for being here and being part of it. We start tomorrow morning. You can start walking, because I know some of you can do two things at once. You may start walking. We will open the doors at 8:30 for morning tea, and we'll have our first presentation at 9:15. And Joe, I believe, is on at 10 minutes past 10. So we see you then. Thanks, everyone.